Welcome back to Smart Money. We're talking about the big themes to watch out for in 2024. Gurmeet Chadha of Complete Circle Consultants is with us. And before the break, we were talking about data centers, the power theme, as well as the entire manufacturing space. But one sector, Gurmeet, that you have liked for a very long time is the auto sector. And it's actually coming into its own now, right? With so many of these auto companies doing exceptionally well, many of them hitting 52-week highs as well. But do you think there is more to go, both in the electrification of vehicles as well as in the, in the traditional auto space? How are you feeling about it now?
Absolutely. I think we've had a 6-year lean period, in auto. I think now this year probably we cross almost 40 lakh vehicles in passenger vehicles. So we like this space. I think it's a proxy to premiumization also playing out. So just see the ratio of sedan versus utility vehicles, almost 2/3, 1/3 now. It used to be the reverse in the last decade. So every 10 cars sold, 7 are UV. I think M&M and Tata Motors have been big beneficiaries. Tata Motors more in particular, with JLR also getting revived and taking a leap in terms of as far as EV is concerned. M&M still trades at about 14 times forward, 16 times trailing. I think after the RBL thing, I think market has again raised concerns on capital allocation. In my view, I think that should settle over a period of time. Where SUV market share is back to 18-19%. They want to reach the peak share of 20% plus, which they achieved in FY14. I think the tractor thing will also do well with focus on rural economy. As sowing has been pretty good. Average crop prices have been better. I think the rural economy will see uptake, which will reflect in tractor and farm equipment. Good solid governance and balance sheet. I think that's something which I like. And also the ancillary part of it. I think Uno Minda has been an old favorite. Again, playing the premiumization theme within auto, more content per car, the likes of airbags, alloy wheels, car seats, infotainment switches, systems. Then you have Sona BMW, which is a more an EV play within the car. They're working very closely. If you see the current order book, 70% is related to EV and hybrid. They are into assemblies, hybrid assemblies, etc. And very good projects on EV. There are more projects which they are getting into on EV. Has run up in between, consolidated a little bit. So that's something which we like in this space.
Okay, within the EV space, do you think that this story has, sort of been fleshed out entirely, or do you think that there could be, many more themes here, whether it's some of the auto ancillaries that are supplying to EVs, or any other themes that you're looking at? I mean, even, say names like Tata Power, for example, that's doing a lot in this EV charging station space, etc. What else can you see?
So we are trying to basically look at companies which are, again, going to benefit from more adoption. So one of the adoption sets is smart locks. What you use currently is more hybrid. You still carry the key inside the car. One of the company we track is Sandhar Technologies, which is into getting into smart locks. They're doing the beta version of it. Also, they've transformed from a single supplier and a single product, which was Hero in earlier case, to a more elaborate portfolio. There's tooling, there is fabrications, there is the cabins which they make. The entire frame they make for high-end, bikes, especially the 125cc ones. Even in two-wheelers, if you see, it's the 125cc segment which has gained over the 100cc segment. So the likes of TVS and Bajaj have actually done much better than Hero. TVS in particular, huge improvement in margin, almost in double digit now. Great movement in the balance sheet, much leaner. And look at the EV play they are doing through, both the scooter segment and new launches they have. Export markets also catching up. So it's a very elaborate space. You probably need to map the entire value chain, and then probably I see a lot of value. Also the ownership. We have just 10% kind of an ownership in India of PVs versus I don't even want to compare with China, but even some of our South Asian counterparts. So I think this will grow. Probably you will see as many number of car sales as two-wheeler sales, let's say 3 years, 4 years from now.
Okay. Another theme that we're looking at is tourism, right? And within that, you just spoke briefly about it, religious tourism. You have a lot that's happening right now. And we've seen the way some of these stocks like Praveg, etc., have really started to surge quite a bit. But that's a tricky space because it could be just something that is a trend, something that perhaps could cause investors to burn their fingers. So I want to understand from you, within this religious tourism space, which are the companies that you can bet on for the longer term?
Yeah, so I think the broader is tourism, a subset is religious tourism. If you see, for example, the Collier's head, he spoke about 15% jump only in FY24. I think the event is there, which is the Ram Temple in Ayodhya. So if you see, for example, there are multiple players here. So one is short term and can be tactical, and one is something which is more structural. So see, for example, hotel business. It was always a very deeply cyclical sector. But if you see, for example, the demand last year, the demand was 10-12%, the supply was 6-7%. So demand is outpacing, supply, and in metros, it will continue for at least next 2-3 years. Second is the revival even of business travel. See the revival in convention centers like Geo Convention Center in Bombay, Bharat Mandapam in NCR, and likes of that, with various state summits also happening now, G20 events happening now. I think this will be more ongoing. This is not just defined to, just say a World Cup or a certain event, right? So there's a revival there. And most importantly, the hotel models. So, for example, now everybody look at Lemon Tree, for example. They have an Aurika which has come up in Mumbai airport area, and they're talking of another 3,300 rooms. A large part of that are managed rooms. So by FY26, it will be 50-50, which makes it very, very asset light, right? And margins to go up. Look at Indian hotels. They are also talking of almost 50% managed rooms, and they are obviously in the luxury segment, 51% market share, again by FY27. Right? So that makes the model more asset light and not the earlier model, which was very capex oriented and cyclical. So that's one. Second, if you look in this space, let's say something like an IRCTC. Earlier, only the ticketing and bit of catering was doing the heavy work. Now, if you see, for example, in catering, there are more than 200 contracts which will be awarded. The license fees is going up, and there are more than 200 more trains which will be added to the circuit. So very structural demand there. And mind you, we have 11,000 railway stations, right? So imagine the work which can happen. There's a pilot going on with Zomato in a few areas. Water, they are coming up with a plant. Quota has already come up. 2 more will come up. Tourism will catch up. They're already talking of 200 vending trains as far as trains are concerned. So multiple lever, and nobody's spoken about how to monetize the incoming traffic in IRCTC, right? I think it's one of the best tech plays within PSUs in my view. I know it's run up a little bit, but I think it's something which we look at. So you have to look at it from, let's say, and then there are companies who are doing a lot of work because of tourism going up. Companies which are making, let's say, PPE kits, right? Which you make when there is a, let's say, religious tourism plays, or something like, let's say, Malcolm India, available 15 times. So you have to play it through various levers, hotel, something like an IRCTC, bit of aviation, and maybe companies getting into, the construction and infrastructure bit of goods.
And what about your thoughts on names like Praveg that have rallied substantially in the last, many months? I mean, it's been a hot topic of discussion on the internet as well. Any thoughts here? Cautious?
Missed it. One word, missed it. So could not get in early. I think right now the prices are too lofty for us to take a call. But I'm sure there'll be more opportunities, Sonia, which will keep coming their way. And in general, I think this travel, both domestic tourism as well as business travel, I think we'll only see revival as economic activity continues to soar.
Okay. One more space that I wanted to talk about, of course, in this entire manufacturing theme, right, is as we head into the elections, this time it's just a vote on account, but there will be the final election, as we head into the budget rather, this will be a vote on account, but after the elections, there'll be a proper budget in July as well. Do you think within manufacturing, what are we looking at? Are we looking at infrastructure in a big way, road manufacturers, the IRB infras of the world? What do you see as the big areas to focus on in terms of individual stocks?
So I think capex is definitely one. I think there is no doubt about it. I think we are in a capex cycle. If you see that industry level utilization level is about 75%. In some sectors, it's upwards of 90%, like cement. So I think that should happen. We also like the thrust government is giving on rural economy and reaching of credit. It may not be linked to manufacturing, but it supports manufacturing. Manufacturing is so textiles is one. For example, I think India's apparel export share is just 3%. I think it will go up to 4 or 5%. There are multiple levers here. One, there is a wage revision in Bangladesh, Vietnam, which will take away some of the cost advantage. Second, India is trying to do some, trade treaties. Gokuldas has been one big beneficiary with the acquisition they did in Africa, and now they plan to get into EU. Then there'll be more. There is KPR mills, etc. And I think this is very, very labor intensive. So it has a huge multiplier, gives you a lot of political dividends as well. Second, I spoke about digital engineering, a lot of good companies there. And a link to that is the credit to manufacturing and where, the penetration is ready. Look at, for example, bank credit to GDP. We're still at 50%. huge opportunity there. I think corporate credit will be a big driver of credit growth. It's been, the heavy lifting has been done by retail to a large extent. I think a lot of private sector banks and some of the PSU banks will come in. It's a very boring space to talk about, but look at the valuations over here. HDFC at 2.2 times book, ICICI at 2.1 times book, Axis 1.8, SBI 1.2, Bank of Baroda sub 1. I mean, and all of them getting into better ROEs, a lot of ROAs, etc. So I think this entire space looks great, and also microcredit. I think that's something also we like.
Okay. Finally, before we let you go, I wanted your thoughts on IT. I know we spoke about KPIT Tech, but what do you do with some of the larger names? Because, it's been in the news this week. TCS, Infosys coming out with numbers. The basic fact is, yes, the numbers are not as bad as estimated, but the commentary from the management is quite muted. It's very, very somber. They don't expect any major revival in terms of client spends, etc. But still, these stocks have come back. What are your thoughts here?
Yeah, I think you got to be selective, and the market has been selective. See, look at example HCL Tech. They've had a good run. It trades at 1500 plus. It's back to 22, 23 times. I think they'll have a good quarter. The results are due in the evening. We'll get to know. Then we had Infosys, which was slightly soft, but when they gave a commentary and they narrowed them, the guidance to 1.5%, 2%. I think the market was relieved because probably market was expecting further reduction in guidance. I think TCS has clearly stood out. I think maintaining 25% margins and still managing to grow at 2% kind of, I think is commendable for the size of TCS. And see the investments they are making in terms of, they're talking of almost 1 lakh employees being trained on AI. So a lot of work happening on the background. I think in some pockets of mid-cap IT we like some Persistent, KPIT I have discussed, even some of the ERD plays, including LT Mindtree, but valuations are rich only. So, for early single-digit growth, you can't pay 30 times, 40 times. So I think IT, in my view, valuation now, with a run-up in some of the large IT names, the risk-reward probably is into favor.
All right, Gurmeet, we leave it at that. Thank you so much, as always, for summarizing for us the key sectors to watch in 2024. That was a very quick and easy to understand explanation on what you should be buying this year, or perhaps what you should be focusing on in your portfolio this year. With that, it's curtains down on this edition of Smart Money. Thanks a lot for watching.